presented it to me through all of my searches online, reading forums and sitting in webinars and reading books and watching videos and all of that. I decided none of that was helping me, so I thought I would fall back on one of the things that I thought of as one of my strengths in life, one of the things I was best at, and how could I apply that to trading? And one of the things that I was best at, being a contractor, I guess I could go right into that, is that I was really best at problem solving. And being a small business owner, you develop a skill of problem solving, and you really hone that skill because that job as a small business owner, and that's what I did as a remodeling contractor. I solved problems all day long. That was what I did, and I never really approached trading like a problem that had to be solved. I kept approaching it as something I had to learn, thinking that the answer was out there somewhere. I just had to keep looking and working at learning everything about trading in order to suddenly get a clear picture. Well, that didn't happen, and in fact, the more I learned, the foggier the picture got. And so I decided I was going to take another stab at this, but I was going to figure it out on my own as if no information existed at all out there in the markets, as if I had learned, as if I was going to approach trading for the very first time and have to figure it out on my own. When I allowed myself to do that, things began to change. And again, we'll talk about that at another time. So anyway, you've read my little profile here. I find myself still, even after all these years, rather bizarre that I'm in the position where I am to help other people who haven't quite turned the corner yet, looking for that piece of the puzzle. So hopefully you'll learn something here today that will enlighten you at least, or at least let you know that there are other avenues to find success to being a trader. Okay. So one of the things we're going to talk about in this event is largely about order flow and divergence. But we need to talk about identifying why there's differences in order flow and who's creating this order flow and these opportunities for us. Okay. The first thing that we want to do is find the most obvious order flow, and, and that is the swing. Okay, that's pretty. It's pretty obvious. The people with the money are the ones that can move the market, and I think not so long ago that we were all kind of surprised to find out that there were market makers out there that were able to move the markets at their whim, and there was nothing we can do about it. It has become much more prevalent because the computers, the supercomputers, now have the ability to be placed inside the exchanges. The people with the money hire the programmers and the traders to manage these computers and to generate these trades that there is no way us little retail traders could do. We can't trade as fast as these guys can trade. These guys can trade in milliseconds, and I'm talking, a lot of trades in milliseconds. We can't do that. So if you get into a situation where you realize, okay, well, it's just unfair. These guys just have an unfair advantage. But I'm going to try to trade with them. So you could try to trade against what they're doing and get just plowed over like trying to jump in front of a freight train, or you could try to trade with them. And you end up finding out that that's like trying to catch a falling knife, because as soon as you get in a trade, because you're very slow, you're just a person on a PC in a house with a mouse. You have so many things against you. There is no way you can compete with these guys, or at least jump in with these guys, because by the time your order gets filled, by the time you've realized that you have an opportunity, chances are they've already figured out when you're going to be able to get in, and they're going to turn things around, and you're going to get hammered. Anybody that ever happened to anybody here? Seemed like it happened to me every time. Every time I wanted to try to jump into a trend or jump into a move that I felt was going to be an extended move, it seemed like as soon as I got in, everything changed and it turned around and went the other way. So what do we do if we don't trade, with them, and we don't trade against them? We want to identify when they're trading so that we know what's happening next. So trading with the smart money is really just as easy as putting money in the bank, okay? Or trading after smart money. We don't want to trade with them. We don't want to trade against them. We want to identify when they trade and take advantage of the things that they're causing in the markets, okay? And I'm going to tell you about all of that and why this happens and why we fall for it every time. Have you ever asked yourself or wondered, if you're sitting and looking at the chart and you're sitting there and you're just kind of waiting for a setup, you're analyzing things, you're going over things, you're looking at other charts, you're looking at maybe you're watching TV, you're watching videos, you're doing all this while you're trading. And then you notice something particular happens in the markets, and it just out of the ordinary that's been going on lately. Something out of the ordinary happens. You ever just sit there and go, yeah, I wonder why that happens. I wonder, that was probably one of those market makers, one of those HFTs, those supercomputers, probably just did that. Gee, I wonder why. Well, a lot of people, and it cracks me up, a lot of people say, well, it's they're stop hunters. That's what they're doing. They're hunting for our stops. Us little retail traders, they're our stops. Well, that's actually, there may be some that do that, but they actually can make so much more money so much easier than being stop hunters. But you got to kind of get curious as to why this happens, right? Here's the short answer. The smart money, and we call them smart money because they're the ones that have them. The smart, are we starting? What does that mean? Daryl, are you not seeing, am I not projecting? Are you not seeing slides, or can you not hear me? Somebody needs to, I don't want to go any further if Daryl can't see or hear. Somebody? Could somebody ask Daryl if he, okay, good. So everybody else can hear me. I'll just keep moving on. Here's what I'm going to do. I'm going to cover up the chat so I'm not distracted by stuff like that, because I do want to make sure everybody's, happy and comfortable and getting everything they need. So I tend to look at and read the chat, which absolutely gets me off my game here. So I'm going to cover it up. I'll let Connor and Lisa make sure they are looking at the chat and answering questions for you. If you've got any questions directly for me or relative to something that I'm saying that you want me to answer, hold the question until later at the end, and I'll answer questions all day long. As long as you have them, I'll answer questions. Okay, so the smart money. We all know what the smart money is, right? These are the big hedge funds, the high frequency traders, the the ones that have the algorithms that they've spent millions and millions of dollars on, that can move the markets at their leisure. Okay, these are the market manipulators. They want to create a typical reaction from us typical retail traders. This is why they do it. So if you ever asked yourself, I wonder why that happened, this is exactly why that happens. It's not because suddenly they feel like price is so good right now they want to buy up a whole bunch of X or assets. All of a sudden they just really want them really bad. No, this is a planned event because they know they want to create a reaction. Now, some of us are going to get lucky and we're going to be able to take advantage of this sudden reaction by if we happen to have been in a trade and we can now scale out of that trade, or at least, or maybe even take the trade off. We see suddenly, oh my gosh, I can make a bunch of money here, and suddenly you have an opportunity that you didn't realize you were going to have. It's very likely you're going to take advantage of that opportunity way before you have a chance to think about what you're doing. Same thing if you're in a trade and it starts going against you. The markets are being manipulated so that people react with emotions. And that can be panic or anxiety, stress, greed, whatever. They don't really care because the net is the same. You're going to start trading. You're going to start getting out of your trade. You're going to start creating the reaction that they want. Okay? Because that gives them the ability to now take advantage of the new conditions. Okay? So I went over this on Thursday. I'm not going to go over it in as much detail today because you can go back and you can look at this on the video that we did on Thursday. But I am going to go over this very quickly. This is a very simplified version of a way that the market makers manipulate the markets over and over and over again. Happens every day on almost every instrument. You can see it on every time frame. If you look at charts carefully enough, you will see this. I promise you, you will see this. Maybe not as simplified as this, but you will see this pattern repeated over and over and over again. So what we're looking for us, and again, go back on Thursday's video and you'll see more of a description. We're looking for particular opportunities where something sudden and unexpected happens. We're looking for these upthrust bars that happen during the course of this manipulation. When we get these upthrust bars, we typically have an increased rate of trading such that it's highly unlikely that us little retail traders were able to do it. That's when we print our speed tick. And I'm going to go into a lot more on the speed tick here in just a few minutes. But I wanted to let you know kind of where we're headed, what we're looking at, and why we're taking advantage of a particular part of these manipulations. Okay, we also have the ability to not just identify the speed at which these orders are coming in, but we also notice that when the acceleration reaches a certain point, so maybe they don't reach 100 miles an hour, maybe they only reach 80 miles an hour, but they accelerated from 0 to 80 really, really fast. We also find that we have an opportunity there as well. Okay? Now, the smart money is setting us up to create opportunities for themselves. All right? Again, some of us win, most of us don't. We're caught off guard, and they're forcing us to do something emotional, typically. And now they've got us where they want us. They've got us trapped. Right? There's nothing we can do about it. It happens every day, over and over, all the time. So I'm telling you this not because I'm letting you know what, you're pretty much screwed and there's not anything you can do about it, which a lot of people have come to. It's funny because I watch the videos and I read or used to, read the forums, and I don't so much anymore. I really don't have time. But I have a lot of opportunities to hear from people, and a lot of people believe that these market makers have such an unfair advantage over us little retail guys that it's just not worth trading anymore. So they've already decided either to get out of trading because it's it's just not fair, because you're going to get hammered no matter what. But I'm here to tell you, you know what? You can get on the right side of that. There are opportunities that most traders, almost all traders, ignore because they don't believe that opportunity provides them enough of an edge to make a bunch of money on a very small trading account, trading very small numbers. So they don't, or so they're not interested. So many traders, me included, wanted to be able to trade for a living, starting out with a very small trading account. Now, of course, you have to start with a very small trading account, and you want to learn and grow from there. Unfortunately, we start believing, well, my goal is I need to make $500 a day. Okay, $500 a day. That's all I need. If I can just do that, I'm fine. Okay, and so you start out trying to make $500 a day. You don't start out trying to learn how to become a profitable trader. Okay, that's a totally different. See, this is one of those things I had to figure out because nobody told me. First, learn how to be profitable. Learn if you can be profitable. What does profitable mean? It means not losing money. Doesn't mean making a lot of money. It means not losing money. So if you end the day having made $1, then you're a profitable trader. Did I have the ability to do that? So I started thinking outside the box. How can I do that? So that's why I started building this whole thing. So I started looking at opportunities that maybe other people were not taking advantage of, and that was some of these pullback trades where there's something very obvious that was going on. So what I noticed was during these times in the market where at the time I really couldn't figure out exactly what was going on, but what I did notice is we'd have these sudden bursts of order flows, all headed in the same direction, either up or down. And these flow of these orders, when they were strong flows, always caused price to stop and pull back. So my question was, if I could get in on those little pullbacks, if I could identify what's going on doing these strong flows, and then I could anticipate the imminent exhaustion, then I would have it. And that's where this mission led me. Okay? Strong flow. Always, always, get this? Always, write it. Always leads to exhaustion. There are not too many um, facts in trading where something always happens. So if strong flow always leads to exhaustion, maybe we should be measuring strong flow so we could anticipate that exhaustion, so we could anticipate what's likely to happen next. Now, the harder the flow, the more imminent the exhaustion. Think about a sprinter, okay? I use that analogy on, you can go back and watch the video on Thursday. And the better we get at measuring flow, the better we are at anticipating this exhaustion. If we know strong flow is happening right now, right this instant, then we can be ready to anticipate the exhaustion that's setting in. Okay, this is a whole new way of thinking about trading. Not thinking about getting into this strong flow, which is what everybody else was trying to do, but let's wait until the strong flow is over. If we can read when it begins to diminish, then we have an edge, right? The higher degree of confidence we have in expecting price to do something predictable. That's what we need as traders. Can price do something predictable over and over and over again? And it can, and it does every day. But most of us have ignored it for years because it doesn't look like much of an opportunity. So we've got order flow. We want to read flow. Flow is very important because it helps us to anticipate exhaustion. Okay? So you've all heard about tape reading. This is the way that flow used to be read by the traders that would keep up with the big boys. Okay, even back in the day, the big boys were able to move the markets. Certainly not in the time frame that they're able to do it now. So now we have a different way of doing it. Now we have the time and sales that all trading platforms have, where we can actually see the orders being processed. Now, there's a difference between orders and orders being processed. When you place an order at Amazon.com for something, that's just an order. That doesn't mean you're going to get that item. It simply means you've told somebody you want that item. Not until they fulfill that order and send it to you does it become a transaction. So order flow is basically the wrong term that we all use when it's actually transaction flow that we're interested in. And that's what the time and sales does. Transaction flow is actually what's very important. Now, let's go back and look at this again real quick. What do we all as traders, what are we trying? We can look at a trading chart and we can look and go, okay, I don't want to be trading during this period of time. And what part of a chart would you say that? That would be in areas where price is not really moving much. You can see it's just kind of drifting around. There doesn't seem to be a lot of intent. There's not much interest. Price is just drifting around. Now, chances are the big boys are really busy, but that doesn't really provide us much of an opportunity. They're trying to pick off all the retail traders that are trying like crazy to trade, that are just making dumb trades. I was one of them. I kept thinking, well, the price is moving, so what do these people know that I don't know? So heck, I'm just going to get into a trade because there must be opportunities here that I'm just too stupid to know about, so I'm just going to get in and see what happens. Okay? You know how long I did that? I could rationalize a trade, so many ways. So many ways. The more indicators I had, the more charts I had, the more monitors I had, the more information that I had, the more ways I could rationalize my way into a trade. Okay? But we all know that nobody wants to be trading during the time when price is just moving sideways and channeling. There's really nothing to be gained by doing that. So let's just take that out of the equation. Let's say we don't want to trade during this. We want to be out of the markets during this period of time. And this happens a lot, right? Now what's happening here is prices or they're very low volume, meaning not a lot of people are trading. There's not a lot of contracts being traded. So volume is very low. The rate at which the orders are being processed, or the transactions are being processed, is also very slow. So if we start to measure this, we want to make sure we're avoiding trading during the time. That makes it so much easier to sit and be patient, right? And that many of us have a very hard time with sitting and being patient with our trading. So let's look at other times in the market when things change a little bit. Now, here's what the market makers are. They're making the market, because things have been so very slow. They can actually move price a pretty good amount without putting a whole lot of effort into it. Okay, they don't have to use a whole lot of volume, but they can make it happen very quickly. So that gets people's attention, right? It causes a sudden and unexpected event. You can look at that, you can see it, the low volume, but the rate going through on these time and sales. Okay, you can actually watch it. Now, if you try to do that, and watch charts at the same time, what happens, or what happened to me, is I would get hypnotized, and I would stare at those numbers changing real fast on the time and sales windows, which you can only watch maybe one or two, and so you get hypnotized, and then you forget what you're doing, and so I ended up having to stop doing that. So what I did instead, when I started thinking, you know what, retail traders can't trade low volume really fast. You're not going to see that happen. So if that's happening, if it's relatively low volume, but it's happening very fast, who can do that? Gotta be the guys with the supercomputers inside the exchange. It's gotta be them. So if I could find out when price is moving on relatively low volume, but moving very fast, that's going to tell me where the manipulations are happening. And I go back to the questions. If they're manipulating price, why are they doing it? They're doing it to cause a reaction. Okay? So I had a programmer. I told him this whole idea, and I told him what I wanted to do. And I said, okay, since I can't stare at the time and sales charts, I need a way to understand what I'm seeing. I said, and so I envisioned this histogram that's essentially like a speedometer, right? So I had him develop this histogram that told me the rate of orders coming through. So it looked to me more like a speedometer rather than just a bunch of numbers ticking by me. So then I took this histogram and I threw it on a chart and decided I was going to start studying this histogram. If I could see anything, if I could see what my theory was. My theory was when price is moving really fast on relatively low volume, price is going to stop and turn. But that was a theory because I could just watch the time and sales, and that was very difficult to do. I put this actually is down here at the bottom. This was the histogram. In fact, we still ship it out with the speed tick, but we don't use it to trade anymore. I used to use it to tune the speed tick. The new version in NinjaTrader 8, it does it by itself. So I could see when price exceeded a certain level, it would stop and turn. There was my big aha. There was my big, this is how you use order flow. This is how I understand where the big boys are trading, because they're the only ones able to, or most likely able to, trade beyond this line. Okay? Suddenly started being able to pick up. These turns are happening before the turn happens. All right? So then we, wherever that threshold was, whatever that line was, we began producing or printing speed ticks. So I didn't want to use a histogram. Everything that we do here, we call them heads-up display indicators. I want them where my eyeballs are. I want my indicators to print right where my eyes are and not have to go around and look at all of these different measurements of things to decide if I have a trade set up. It's got to be right in front of me. So that's why I removed this histogram, because I don't need all of these. I don't need all information. I need this information, and that's all I need. Okay, and that's so I print them here, and we removed the removed it from the chart. So this is saying that it's very unlikely that these bars, now it doesn't have to be a big bar. It just has to be the rate of orders going through at that time is such that it's highly unlikely retail traders could do it. Price doesn't have to change a whole lot. We see plenty of stars, something like this, with speed ticks on them. So it tells us that something's going on inside that bar. Okay? Oh, I already went over that. Sorry. I made it bigger so you could see the speed tick. So it's telling us price is being manipulated, sellers are taking profits, buyers are getting stopped out or exiting, demand overwhelms supply, price turns because of the new demand for the new lower price. All right? Simple, simple, simple. This is not complicated. Once you decide you decide to let some of this information that you've been holding on to for a very long time and thinking that this is knowledge, this information that you have, this conventional wisdom, if you can set that aside for a little while and understand that this can be simple. You just got to find a place where you simply react to the conditions that exist because you know something is imminent. So we're reacting to the flow because exhaustion is now imminent. Okay, got it? Got order flow? Simple, right? It's simple, but wait, there's more. We don't just sit around waiting for orders to start going through at a certain rate, although it helps a lot. It helps tremendously. That is an indicator that something is happening. It is not something that tells us to take a trade. We have other ways of measuring order flow. Very, very important ways. So the rate of orders coming through, you notice I didn't say the rate of buy orders or the rate of sell orders. And I keep saying orders, but I mean processed orders or transactions. The rate of transactions being processed. All right, we hear order flow, but it's actually processed transactions. And I've done another webinar on what order flow actually is. And actually order flow is a trick that again, the market makers will do to us. And especially if you use a level 2 or you look at your the orders on your dome trying to make decisions from that, they'll be placing orders and removing them before they actually get a chance to be processed, because that can mess with your head and make you make decisions based on something that never happens. Okay, so that's order flow. Anyway, that's a whole different thing. Now, you notice I wasn't talking about buy and sell orders going through the markets. Which ones? I'm talking about all orders. And I keep using the term orders because that's what we're all familiar with. I keep talking about all orders. All right? But it's very important how they come in. That type of order flow is also very, very telling if you know what to look for. And almost nobody knows what to look for, or at least they don't know a good or easy way to look for it. I have seen some ways of doing this that are really good. They work really well, but they're very, very complicated. And so we've taken something very complicated and tried to make it very simple. All right, so look, we got two candlesticks here, right? Both of them identical. So let's say you're looking at trading charts and you see these two bars and they look identical. You know absolutely nothing about them except the high, low, open, and close of these bars. But they are extremely different candlesticks. Even though they look exactly the same, they are extremely different, and one of them offers an opportunity that the other one doesn't. And let's look at that. Let's look at the orders coming in. Let's just say these are the orders coming into this first candlestick. So they come in, they drop a little bit, and then they go up, hit the high, come back down, drop to the close of the bar. Okay? Very typical bar, nothing really special happening there. The sellers got interested, then the buyers took over, ran it up, then the sellers came in and closed it out. Okay? Let's look at another bar. Sellers are interested, buyers are fighting with them, sellers getting more interested, fighting harder. The buyers are like, no way, man, we're taking over. We're going to run this thing up. The sellers are coming in. Nuh-uh, you're not taking this up. The buyers and sellers are now fighting with each other. Looks a little different now. This is what we would call a churn bar. The buyers and sellers are fighting it out at a certain price. The buyers want to keep running it up, of course. The sellers are saying, not anymore, not at this price. We're going to print something on that bar that says, hey, there's some volume of the order flow of the volume coming in is much different on this bar, such that it's very likely that the buyers have been at it so long and have pushed the price so far that the sellers now begin to have the leverage, even though a lot of the buyers haven't really come to that conclusion yet. So they're still working really hard at running that price up. The sellers are working really hard at taking over. Well, the sellers aren't exhausted at this point. The buyers are. So there's a good chance this is a great place for exhaustion to be setting in, for that strong flow from the buyers, and then the processed orders coming in from the sellers, they start competing. Right? So this is our pullback alert. This is where the flow of the processed transactions relative to the volume of the buy and sell orders. Okay, and so we're able to pick these up and pick up turning points. Okay, so we're all about predicting pullbacks, or understanding with a high degree of probability and increasing our odds of understanding what's likely to happen next. Are we looking to make $500 per trade or per day? Eventually. But first, let's just learn how to win trades, and let's learn how to end the day as a successful trader. Maybe that's one tick. That's a starting point. That's a foundation from which to grow from. Instead of, oh, I made $500 today and I lost $1,000 yesterday, but I made $750 today and I lost $800 the day. You know, it's crazy the way that we keep thinking that one day we're going to wake up and suddenly we're going to just be winning. With the clouds will have parted and the answer becomes very clear because you found that one indicator. that you've been looking for because your system is that you've been working on, you're almost done with it, right? Oh, you're so close. You can just taste it. You're at about 70, 71, 72% winners, but that's not quite enough to make you the money that you're looking for. So you're going to keep looking and you're looking for that one indicator to get you that next 5 to 8 to 10%. I looked for that sucker for 7 years. Never could get there. What? Most people never do, even though almost all of us believe we're that close. Okay? So this is why I started looking elsewhere. Started looking to predict where price was likely to pull back. So I developed a way to understand where price is flowing very strongly so we can anticipate that exhaustion. Now, well, that's all I need to know. Remember, flow to anticipate exhaustion. That's all we need. Now we're going to talk about divergence. Because at the same time we're getting that flow, before exhaustion has actually settled in, momentum has very often already shifted directions. We use momentum oscillators to help us understand this. I'm going to go over through how momentum oscillators work and why we use them. Okay? So the quick and easy definition of divergence. Okay, this is an image of a divergent condition, but I'm going to talk about that. When price of an asset or an indicator and some other indicator, index or related asset, when they're moving in opposite directions, okay, so we like to make decisions based on the fact that these indicators have diverged from each other, okay, and oftentimes that shows a weakness and an opportunity. So that's the short and easy thing. Divergence for me is actually one of the strongest technical indicators out there, coupled with transaction flow or order flow. So a divergent condition, quite simply, is when price is setting maybe a higher high and momentum is setting a lower high, or a higher low to a lower low, or whatever. It's when, I think I moved ahead. It's when they get out of agreement with each other. Okay? Most times, price and momentum will agree with each other. It's most common. When they get out of sync is when we have a tremendous opportunity. All right, so let's talk about there are a number of different momentum oscillators. We like to use the RSI, the MACD, and some others, and I'll show you those in a few minutes. And there are different algorithms for calculating momentum. Okay, I'm going to use the most to illustrate, and it's actually called the momentum oscillator. It is a momentum oscillator, and it's called the momentum oscillator, just like it's called the relative strength index oscillator. Okay, so the most simple algorithm or calculation for figuring out momentum is the momentum oscillator. So that's one I'm going to use, but you could use any one of them and come up with essentially the same thing. All right, so we've got a price chart here. And down here at the bottom, we've got the oscillator. Okay, we know what an oscillator, for those that don't know, it's an indicator that's basically a wavy line that oscillates relative to the conditions. Okay, so let's just say we're going to use that algorithm that we saw. We're going to take the high of this bar, the high of the bar 10 bars back, and we're going to subtract this high from this high. Okay? So that's going to give us a number. That's going to give us plus 0.07. Okay? So there's a point now that we can plot on this oscillator for our very beginning, for our very starting point. Now let's move over to the next bar. We're going to take the close of this bar, subtract the close of this bar, and we're going to end up with 0.06. There's another point that we can now add to our oscillator. Okay? Now, you'll notice that slope has been created. Let's go, just for the sake of an example, let's show how this could be a little bit different. Now we're going to take the close of this bar, the close of this bar, which was a down bar, and subtract the close of the bar 10 bars back, okay? And we're going to come up with, okay, plus 6. Now, the next one, oh, look, this looks very different. The close of this bar, subtract the close of the bar 10 bars back. We're now going to end up with a negative. And if we keep doing this bar after bar after bar, we end up with enough points to create an oscillator. Okay? So that's how all of this is done. There is some logic behind these momentum oscillators. Divergence occurs when the slope between price and momentum don't agree with each other anymore. Okay? So we're measuring swing lows and swing highs of price. This would be a swing high, swing high, swing high, swing high, swing high, swing low, swing low, swing low, swing low. Okay? When they are no longer in agreement. Now, what's happening here? Oh, there's a bunch of these you can use for momentum if you want to. And so I just listed a few of them there if you ever want to go and look and try them. Let me illustrate a little bit better what's actually happening here so you can understand the relationship between price and momentum. So let's make a very simple chart. I mean, this is again oversimplified for the sake of illustration. All right, so you've got price here, and you have a slope of that price. And now let's say we have a momentum oscillator whose slope matches price. Okay, so the magnitude of change over each bar for momentum and price is relatively same over the last X number of bars, whatever you want to set whatever the algorithm being used. So this is most common. This is the most typical relationship between price and momentum. Okay? Now remember, go back to Thursday. I said Thursday was more general. Today is going to be more specific about explaining why things work the way they do. This is what I was telling you on Thursday that we're going to be doing. To trade divergence and order flow efficiently, you don't need to know any of this. None of this. This is for information for those people that feel to drive a car successfully, you need to know the workings of an automatic transmission and a combustion engine, an internal combustion engine, and all of the parts and pieces that make a tool function. Okay? This information is for you guys. For those of you that just want to find a very simple, straightforward trading system that makes it easy and makes it less complicated, this isn't for you. This explanation isn't for you, although you may find it interesting. You don't need it. Okay? So let me go back to this magnitude. We're changing we have the same magnitude of change. So nowhere during the course of this measurement for divergence do we see any type of divergence. Price and momentum are moving together which is most typical. So what we want to do is see where they get out of sync with each other. Okay? Now we've got the slope of price and the slope of momentum, but you will notice that the magnitude of change is different now. And at some point, because they've gotten out of sync with each other, they are now in a divergent condition. Right? You see that? The slope of price is down, but the momentum, although it was down here, has already started turning the other way. All right, so we have strong, let's say this is the strong order flow that I was telling you about before. So we're reading on this bar, and maybe we're getting a speed tick on this bar, but we already know that momentum, so we've got exhaustion sitting in here, but momentum is already headed the other direction. That's key. That is killer information to be able to combine those together. So what do we see? If you very quickly look here at this chart, your eyeballs will trace this, and your eyeballs will trace this and say, well, this is all about the same. This is about the same. Price dropped here, this dropped here, price went up here, this went up here, this went up, this went down, this went up. Okay, no divergence, right? Lower lows, lower lows. Lower highs, lower highs. Everything's no divergence here, right? It's really easy. Wait a minute. Whoa. Easy to miss. We have a divergent condition, and what happens is, and here's the most important of what I'm going to say today. When momentum turns before price, price will typically follow. When momentum turns, when price is exhausted, you've got a tremendous opportunity. Because momentum is already strong in the other direction. It's already moving in the other direction. Price just hasn't caught up with it yet. So if divergence is so powerful, why isn't it more widely used? Well, I showed you. You can, if you can figure this out, if this is simple for you, then maybe you should be using divergence. This was before I created some of our divergence indicators. This was the best I could find to help me understand and determine where divergence was happening. And I struggled with even this, and I quit doing it way too soon. I gave up on it too early because it wasn't that simple thing I was looking for. It wasn't when I was struggling. I was looking for easy. I kept adding things to charts trying to think of what makes sense to me. What picture suddenly is popping out of the charts that I didn't have before? So I'd put this on and I'd play around with it a while and I'd go, yeah, I'm not getting anything here. And I'd move on. So it wasn't until I started nailing the speed tick trades, I started thinking, well, if I could figure out where divergence was happening too, maybe I need to go back and revisit that with this new perspective I have, this new outlook on trading, on what I'm actually trying to accomplish. Maybe divergence is another thing that would help me identify where price is likely to turn even better. Okay, so it'd be very typical that if you're trying to pick up divergence, you're going to have a bunch of oscillators, momentum oscillators on your charts that look like this. But instead, I just use this. And this is what we use in the trade room. These indicators print on the open or during the life of the actual bar, and I'm going to show you that. So instead of having all these lines on the charts, we just removed the lines, added our flash, and then removed all oscillators. Okay. Now, this algorithm that we're using to determine divergence was so strong that I added it to that I used that algorithm with the MACD oscillator, and we have another indicator. Then I decided, you know what? Why don't I just get one indicator? We'll add 7 of the best momentum oscillators, and use that to help us determine as many divergent conditions as we can. And so that's our super D indicator. All right, so what are we looking for here? What do we see here? On a naked chart, you're just going to see candlesticks up, and then something happened, and then price dropped. 99.9% of traders don't see anything here. They're just going to ignore it, which is exactly what I did. So we've created tools to help draw your attention to things like this. The very first tool, step one of the qualifying process, is our momentum indicator. You can see where the bars start changing colors when we're picking up momentum. Why do we want to pick up momentum? Remember flow? The flow of orders are pushing up real hard. When we get a strong flow, that means we have a lot of momentum headed in one direction. Then what's imminent? Exhaustion. Now, we also have an overbought condition. That's this pink outline. Another way to read exhaustion. So there's at least two ways of reading exhaustion here. This is our rock star setup. This is what we it got named. Our traders in our trade room started calling this our rock star, and then we can actually add in some support and resistance to help us filter out some of those trades that may want to try to go against us. But then we use a defensive position. And if you decide, like I do, I don't take, currently, I may someday, but I don't take trades unless I've got a safety net or a defensive position in place. Now, if I saw this trade just like this on a chart set up at the open of this bar, these divergent signals are printed, and technically the your trade is set at the open of this bar. If you're lucky, you actually got a better fill up in here. And I'll show you that on a video here in a few minutes. Um, oh, I'm sorry, I'm on the wrong thing. Right here. This is the order where you place your order to get in the trade. This printed at the as soon as this bar opened. So I knew I had order flow that is highly likely to be manipulated by the big boys. I have a strong push in one direction, so strong momentum in one direction, and I have an oversold condition. Oh, up under here, you can also see that pullback alert and the ricochet. All of this confluence of strong flow with dramatic potential for exhaustion and momentum already headed the other way. Now, we have a lot of traders that trade it just like this. Okay? They will trade this. We call them naked speed flashes. They're naked because they don't have the support and resistance behind the trade, which is what I like. I like to have resistance behind my trade in the event it wants to try to go against me. It'll help hold it in place. And I'll show you that. Actually, I found a video this week, found a video of some trades we took this week. So let me show you that. This is on the something we did on the CL a couple of days ago. Now, I'll back this up just a hair. What did I just show you? Now this is live in the trade room, okay? This is a video from our trade room. That's why it's blurry. Our trade room video does a blurry. Oh, I opened this with the wrong. This is going to be hard to see. Hold on a second. I need to open it with a different video player because then I can scroll better. QuickTime allows for scrolling better than the Windows video player. Okay, so let me scroll this to where we were. This looks just like that example I just showed you, doesn't it? This happens in the trade room all the time. All right, so we've got a big, strong push. We've got a bar that's most likely being manipulated here out of nowhere, right? Price is just channeling here, right? Nothing going on. All of a sudden, whammo! Price is being manipulated. Look at this. There's our pullback alert saying that the sellers were strongly in charge until the buyers started stepping in. And what a great place for this to happen, right on a major line of support, pushing down our low of the day. We got our pullback alert. Now, remember what I said, and those of you who are bunt traders, right there, you're going to go, oh, Tony, that's not a trade. Because my rule is, if I'm going to take this trade on the open of this bar, you notice where these indicators print, right? This printed during the course of this bar. This printed during the course of this bar. All of this printed on this bar. This bar opened telling us that we have divergence, that momentum, even though price is doing this, momentum is doing this. And price will most likely follow. This is also, look at all the different divergence we have. We have 6 different divergence, momentum oscillators saying that price and momentum have diverged. And when that happens, it's very likely price is going to try to catch up. Okay? So if those of you that are bunt traders are going to go, oh, Tony, you cheated. My rule is I will not take this trade unless price is 5 ticks or less from this support. That's just a rule I have. That takes a little practice. We created this little tool here to help. This comes with all packages that we sell. It's called our OTS, Open Target Stop. So I know immediately that if price opened here, right here, that my stop is right here, which is 7 ticks away. Well, that's telling me that if I entered a trade right here and price came down here, I'm not going to get much help from this support before my stop gets hit, right? It might test the other side, hit my stop, and then bounce right off. So I really want this support to help me. So by a quick visual, I can say, oh, nope, this is too far away, because I know this line is at 5 ticks. So if this line was on this line, I would have jumped in that trade on the open of this bar. But what did happen? As soon as the bar opened, it dropped. Aha! This, for all of you naysayer bunt traders that saw this and went, oh, Tony, you cheated. Nope. This is where I got into this trade right here. As soon as it dropped, now I'm 5 ticks or less from that major support. Entered this trade right here. And boom, that's all I needed. There's my little piece. My little piece of that trade. That little bounce, that little pullback is my edge. That's all I need. And you go, oh, well, it's only 5 ticks, Tony. How am I supposed to make any money at that? You know what? First thing you need to do, become a successful trader. Do something over and over and over again. Become very good at doing very small. And if it's 1 tick a day, it's 1 tick a day. If you can end 1 tick a day as a winner, 1 tick a day for a month, you're ahead of everybody else in trading. Okay? It's not about the money. It's about establishing that you can be a winning trader. That gives you a platform to grow from. Okay? Now you know with confidence that you can do this. Okay? And then off it goes. And it doesn't have to pull back far. That one pulled back a ways and then it hit a line and it bounced off that. All right, so another example, same thing. Now, we're looking for a confluence of events. This particular trade doesn't show the dark bars, although I can visually see that we have a good strong push down here. The conditions didn't exist that created these black bars yet. But That doesn't mean we don't have a good opportunity here. We are showing that price is manipulated. We have hit a major line of support. Price is bouncing around. Price is hanging around. Boom. Right there. Because this bar was also manipulated. It was also a doji for those of you that like candlestick pattern. Remember when I said a bar doesn't have to be like a big long bar to get a speed tick on it. Look at this. It's a doji and it got a speed tick on it. What does that tell you? It tells you that this bar was being manipulated but on relatively low volume, but the orders were going through very quickly. And we have a divergent condition. Strong push this way. Divergence has set in. Even though price is going to drop, momentum has shifted. Put on a buy order there. And I'm in, I'm out, I'm done. Money in the bank. I put my money in the bank. I hit my target. I put my money in the bank. And I'm done. I don't care what happens after this. The safest place for your money is out of the markets. Here's another one. Same thing. It happens over and over and over again. I mean, I could show you trades from 3 years ago. I could show you trades from yesterday. It's the same thing. It hasn't changed. That's one of the interesting things about what we do versus what a lot of other companies do who are constantly coming out with new indicators, new styles of trading, new this, new that. I found something that just works, and man, we stick to that. And we do it over and over and over again. So, gone are the days of having to scan charts trying to find indicators, trying to find setups, trying to find an edge. You don't need to do that. It's all there in front of you. All right? Now, if you're of the mind that it's no good if it's not complicated, then you're not going to like this. You're not going to believe in it because it's not complicated. Here's the thing that I used to think, and probably missed out on a lot of really good opportunities when I was trying to learn. I would look at something and say, well, that's just too simple. If it were that simple, I would have figured it out on my own. So there's no way this can work. It's got to be, I had 12 monitors at one point. It's got to take 12 to place a winning trade. So if this is, you're probably not going to like this because there's not a lot of the stuff that you saw today, a lot of the detail, a lot of the getting into why things do what they do. I'm showing you all of that today so those of you that need to know how this works will understand. For those of you that just want it to work and just want to learn how to use it, all you got to know is a confluence of events that suggests that price is exhausted and that momentum has changed directions. That's all you got to know. And all you need is a few simple rules and practice. And if you can handle that, you don't need to know the workings of a internal combustion engine or an automatic transmission to use the tools to get the job done. My wife thinks that a car works from gasoline and a car key. And that's all that she needs to know because she can still use that tool to get from point A to point B, to do the job that that tool is intended to do. So, now what? All right. So we have a trading room, right? Our trading room actually won an award that we're proud of because we're very different than most trading rooms, and that is that we sit quietly and we do nothing but wait. And occasionally we'll talk and we'll chat, but mostly quietly waiting for a confluent set of conditions to exist, and then we all just enter a trade. And we post our trades, winners and losers. We talk openly about what we're doing. It is not a high-stress type of place. It is not a place where I'm trying to sell you anything. It is not a place where we're teaching. Okay. If you want to learn more about what we do, there are better ways than sitting in the trade room. The trade room, by design, is boring. It's we don't try to entertain you or teach you. We have other things for you. We have more efficient ways for you to learn about us that we've gone to a lot of trouble to prepare so that you don't have to spend 15, 18, 20 hours with us in a trade room before you feel some level of comfort about this system or about us or about whatever. We have lots of information for you. But that being said, everybody's have their preconceived notions and assumptions and expectations. I've fought against that for years, and it doesn't seem to help. So come on in, hang out with us. Come take a trial in the trade room if you actually believe that that's the most efficient way for you to learn. And we'll let you do it for free. Just send us an email at bunt@theintentionaltrader.com, and we'll get you hooked up with a 5-day trial. Okay. So for those of you that are ready to go, you're ready to invest in yourself, and you know that this is right for you. We've got a special for you. This is our VIP. This is absolutely our most popular package. Is kind of a one and done thing. You get all of our indicators. You get every indicator that we ever develop for the trade room in the future. Like the Super D was new. All our VIPs got that for free. You get unlimited access to the trade room. We have a group mentoring session every week. These ahas. I told you I had an aha that kind of got me started on thinking outside the box, on approaching trading as a problem solver rather than somebody trying to learn something. And that one aha opened the door. So many ahas. I share those every week. And these ahas turns out to be pretty much 80% of what you need to know to be successful at trading. So 20% of what you know is what we talked about mostly today. And that's the bunt trading, the placing trades, identifying ups, managing the trade, exiting. That's about 20% of what you need to know to be a good trader. And the ahas is the other 80%. We've got priority support. We have playback videos. We have a training program that teaches you how to learn our trading and how we do it and how you can accelerate the learning process. And it's not a bunch of videos for you to watch and then go, oh, I got it. It's videos to teach you how to practice, how to efficiently, you notice I'm all about efficiency, how to efficiently work at your trading, how to work at your trading with confidence, knowing that the work that you're doing is going to have results. Okay? A lot of us think we're working at our trading, but have absolutely no confidence that the videos we watched, the books we read, the indicators we played around with, the system that we've designed, we don't really have confidence that that information is absolutely going to lead to us being more successful. So the Fast Forward program will do that. Will help you earn that confidence. Okay, and then if you when you get to a point that you're ready, we'll sponsor you in a Top Step Trader Combine where you kind of do a tryout to earn a funded trading account. We've got another package for you if you want to kind of go into it a little bit more slowly and maybe upgrade to VIP later. You certainly can. It's a bit more expensive to do it that way, but if you want to ease into it a little bit more slowly, again, we won awards for these indicators, these star awards, and so we have all of our pullback indicators. And if you want a mentoring session with me after that, just request it, and I'll have a conversation with you. Maybe you're struggling with something, and I can help you with that. I have had the opportunity after all these years to talk to an awful lot of people and I have some insight, having been through what a lot of people are going through. I have some insight that might be helpful. Um, we do have a an installation package that we send to you. You can install things yourself, or you can request to have our tech support guy, help you out with that. So that's only 2,600. It's usually 52, 55. So the two, oops, I mean, I clicked that twice. No. So those are our two offers for this week. You can go to this URL right here and take advantage of it. We're really have a lot of good feedback from people that do the 6 months bill me later thing. That gives people an opportunity to spend some time with us in the trade room, spend some time on the fast forward program, getting comfortable with the setups and doing the work uh, before they have to actually start paying for the investment in the program. So check that out as you go through the checkout process. The PayPal is an option. Click on that, and then you can click the. It used to be called Bill Me Later. I think they recently changed the name to something else. I'm not sure what it is. Okay, so I am moving now. I'm unblocking the chat. Uh, before I answer any questions directed at me, um, you guys want to take a quick 5 minute break? Quick, a quick potty break for those of us that are coffee drinkers. I'm sorry, I said guys, Lisa. Women, you have to stay here. All right, well, let's take 2 minutes, maybe three, and go take a quick potty break, and then I'll come back and I'll answer questions all day. That's one of my favorite things to do. Yeah. Nyak, if you send us an email, Praveen will come and help you out. He'll get on your computer with you and give you a walkthrough. You just got to let him know. Some people don't want that. Some people do, so we don't push it on people. But absolutely are happy to do it, and he does it quite often. So make sure you send in that email, and we'll get you set up. He'll walk you through anything as many times as you need to. As far as sponsor for Top Step funded account, you let me know when you're ready. I'll contact Top Step, and they will, and I'll get you set up, and then they'll get in touch with you and let you know you're ready to go and how all that works. Okay. Do not do it until you're absolutely sure that you're very comfortable and very confident that you have developed the um, skills, because this is a skill. Trading is a skill, right? And the harder you work at it, the more experience you have, the more likely it is that you're going to get through the combine on the first shot. If you try to do it too soon, there's a good chance you're not going to make it through. Okay? So this is still a very simple trading system, but that doesn't mean it doesn't take work. Okay, so any other questions? Any questions for me? I'm sure Connor and Lisa did a great job answering your questions. They usually do. They've gotten it down to. Um, oh, okay, Rick. Interesting. So here's the thing. I'm curious. Actually, I'm not curious. I already pretty much know the answer. But you trade the ES. Why do you trade the ES? Would you trade something else if there were better opportunities than the ES? How many buck traders are still here? I know we have a few that like to come to these things on Saturday. How many of you came were ES started out as ES traders? ES can handle contracts. How many contracts? So you'd rather trade an instrument that can handle more contracts versus an instrument that provides more opportunities? Is that the and I think that's pretty common. Is that people think that they want to trade the ES because it is so liquid that it'll absorb any number of contracts you want to throw at it. It is the most popular and the slowest, most boring. It now there used to be more opportunities on the ES, and that's why there is so much information out there on, they call it the E-mini, and there's so much information out there that, and once it's out there, and it just stays out there. We put the ES in our trading room in order to draw people in that think the ES is where they need to be trading. So in the bottom left corner of our trading room is an ES chart. We put it there so people come and go, well, I'm just going to come and watch the ES. And they're watching us boom, 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 knocking off trades on the YM, the NQ, the 6E, the oil, gold. They're watching us knock these trades out. And in the meantime, the ES is going sideways. And eventually, people start saying, huh, maybe the ES isn't the best place for this. And they start trading our other contracts and forget all about the ES. The ES is in the bottom left corner for a reason, and I rarely look over in that corner because the opportunities, I have so few opportunities. The other instruments do require, once you've grown to a certain, if you're trading a whole bunch of contracts already and you're not trading successfully regularly, consistently, then I'm going to say you shouldn't be trading a lot of contracts. You should be trading very few contracts until you can consistently hit a trading goal or plateau. Then increase the number of contracts you trade. So that's one of the things that we talk about in our AHA sessions, that we all try to jump ahead a little bit too fast. We want to trade a bunch of contracts because we want to make a bunch of money. But truth be told is we're not consistent enough at trading. We don't have the confidence in our trading system to actually be trading that number of contracts. So it's a different kind of way of thinking about doing things here that most people don't think about. Well, once they start and allow themselves the opportunity to think outside the box, they start to kind of enjoy it. We are out of the markets almost 100% of the time. That's the safest place to be. We take advantage of some very very good opportunities, and we take advantage of them very quickly. It's kind of like dodging through traffic, We have a good opportunity to run out there in traffic, grab our money, and run back to the sidewalk where it's safe. So watch us. Watch the opportunities. Bill. Sorry, I just saw that. I've been following trading webinars and classes for some time, have a non-funded account. Non-funded. Okay, so you're paper trading. Perfect. Perfect. That's where you need to be trading. If you're actually trying to trade real money, it scares me to death because people try to jump ahead too fast. Would like to learn how to follow with you and get my head around how to succeed with your repeatable approach. Can you advise me? Yes, Bill. Send an email to Connor or at Bunt at the Intentional Trader. We have a whole bunch of media prepared for you. We have a program called the Fast Forward program that actually teaches you how to learn and practice. Okay? We have an entire system set up that teaches you how to practice anytime. You don't have to be trading or practicing during live trading hours. Most people just at night, after they're done at work, they're done with their day, the kids have been in bed, and they can sit down now and go back. We have this whole thing set up where you can pull up our video recording of our trading room that happens between 9 and noon every day. And you pull that up, You sit down, you pull up your NinjaTrader platform, and you pull up your trading domes, and you trade right along with us. That's our Fast Forward program. That's just one of the lessons that you learn in the Fast Forward program on how to accelerate your learning process. Okay? I don't know of any better way to do it than that. Hard work and doing it over and over and over again. That's what I learned in sports. I was all about sports when I was a kid. That's how you get successful. The best teams start small. They start by learning the fundamentals. I can tell you that we were in the championship game on my junior year. We didn't make it my senior year, but my junior year, we were in championship game. On the day before the championship game, we were running the same drills that we ran, the fundamental drills that we ran very first day of practice in the middle of summer. All right? That's how you become successful. That's how you become experienced. That's how you become the best and better than anybody else. That's how you become repeatable. Exactly. Yuck, no, I'm falling behind on the questions, but I am catching up. No, the indicators, the strength of the indicators, Yuck, is in the confluence of events that all happens at the same time. Each indicator takes different data, and all of the data suggests that a condition exists that we printed on the chart. The more conditions that exist, the higher the probability of something happening. Okay? So for example, and this example I use a lot, but it's a real easy one to follow. Let's say you've been inside all day and you've got you're scheduled some time outside to go do something. Maybe it's a festival or something outside, and you look at the temperature and it says it's 64 degrees outside. And you go, 64 degrees. Well, do I want to carry a coat around with me all day if it's too hot, or do I need to wear a coat at all? I'm shirt and I'm pretty comfortable in the house, but outside, I'm not exactly sure if temperature is really all I need to know about the current conditions to make a good decision on whether I need to take a coat or not. Are there other variables that might help me make that decision? Let's check wind speed. 64 degrees, but a 30-mile-an-hour wind is really freaking cold. You might want a coat. What if it's cloudy? What if it's raining? Okay, so see what I'm saying is one indicator can help you make part of a decision. The more indicators you have with different types of data, the better your decision will be. Okay, as long as you use them all. Okay, I'm going to try to catch up. This ain't perfect. I think I missed. I'm not sure what you're referring to there. Yes, top step. You get to keep the first 5,000. I think it is. You get to keep it all, 100%, and then after that, they take. I don't even know. 80. They take 20%. Let you keep 80 or something. I honestly don't remember. I don't use them. I mean, I don't need to. I've been doing this a long time, so. All right, so Dan's question got answered. 1 minute. Yep, I don't need anything but 1 minute. I could certainly load up on lots of different time frames, but I have no reason to believe that that helps me at all whatsoever. I don't need to know bias. I only need to know what people are likely to do right now. If I get 5 minutes from now, 10 minutes from now, an hour from now, I don't have a clue what thinking, what they are feeling, what emotions they're having, how many times the big boys, the market makers, the HFTs have manipulated the markets. I have no idea. I do know what's likely to happen right now. So I use a 1 minute chart. Send us an email, Stephen, for the trading room, bunt@theintentionaltrader.com. Did I catch that? Hey, if I missed your question, I kind of scrolled through them real fast. If I missed your question and you want me to answer it, please type it in again. By the way, Bob is not a he's not on the staff here. He's just a very happy bunt trader, I think, and a really good guy. We like Bob. Bob has taken bunt trading to another level. He actually has tuned it to do other things that we don't do, but he certainly likes to use it in conjunction with some other things. No other questions? Well, gosh, I hope we get a chance to see all of you real soon. Hope we see you in the VIP AHA sessions that we have every week. See you in the Fast Forward program. Maybe even see you in the trial trade room if you still believe that's a good way to learn or your only way to learn about us. We're happy to let you do it. But we do have more efficient ways for you to learn, including a list of references. Yeah, I definitely, especially, we've created a speed tick now that we can do on NT8 that we've tuned the speed tick, and it's actually so much better and easier to use on NT8 than NT7. And of course, just like anything else, NT7 it's kind of being pushed over to the side, and all the developers at Ninja are now working on NT8. So you're not going to see anything dramatically new or better coming down the pipe for NT7. Everything's being developed for 8. So I use 8. Most of our traders are now using NinjaTrader 8. All of our indicators are working on NinjaTrader 8. We have some new products coming for NT8, which our VIPs will be getting for free. So we're in the process of getting those. They're very complicated and taking much longer to develop than I had hoped, but we're making progress, and those will be available. And they're not just relative to our style of trading either. They're to enhance the user experience of NinjaTrader 8. All right, so they're for anybody that uses NinjaTrader 8, not just wants to trade using our indicators. So we're hoping that it has a broader appeal. But NinjaTrader 8 is far and away better than 7. Any other questions? All right, well, I hope I get a chance to meet all of you very soon. Those of you I already know, I have to be nice to you because we're already friends, and go away. Free trade room. Go to bunt at theintentionaltrader.com. There you go. All right, everybody. Have a great rest of your weekend, and I hope to hear from you soon.